What's up, people? Welcome back to Invest with T Claus. My name is Tevi, and this channel is dedicated to my investment journey, along with coverage on crypto, Tesla, Neo, Virgin Galactic, and ChargePoint. Come for the information and stay for the perspective. So Virgin Galactic hosted its earning call on Monday, and overall I'd say the news was good. How good? Well, good enough that it was the only green spot in my portfolio on Tuesday when the whole market experienced a bit of a pullback. The price has now dropped back down to $19.30 at the time of the recording. I'll cover some of the why along the way for the pop in price as well as the correction. Cannacord Genuity analyst Austin Moeller was on Yahoo Finance discussing the results, and Austin currently has a buy rating on the stock, which he has maintained, but did lower his price target from $48 to $44. I thought the interview did a good job framing up the three things I care about. And really, I would say anyone who's invested in the stock should mainly care about these three things, considering Virgin Galactic is still, for the most part, a pre-revenue company. Those three things, again, as a reminder, are how Virgin Galactic is doing against the milestones they have outlined to reach commercial state, how do they plan to scale the business and the demand for their offerings, and finally, their cash burn rate between now and commercial state in Q4 2022. So in today's video, I'll play you a few clips from the interview with Austin and add some commentary for additional context. I'll go over some additional ratings that were issued post-earning call and wrap up with what I'll personally be doing in light of all this. I'd recommend watching all the way through so you don't miss out on any pertinent information that I'll be sharing. Drop the video an early like if you haven't already, and hit that subscribe button. Those are two easy ways to show your support to the channel and help it grow if you appreciate the content. All right, let's get into it.
I'm just a little bit further digging into that earnings result. Q3 sales came in at 2.6 million, net loss of 48 million. Top line result was 41% better than estimates. As I said, helped along by ad revenue ahead of that Unity flight. Just if you would break down your characterization of the results for us.
On the top line, the results were better than anticipated. That largely reflected increased sponsorship revenue associated with Richard Branson's historic space flight, in addition to government milestone payments associated with payload integration on the spacecraft during the recent space flight in the quarter. So that's not expected to be recurring. And I think it's important to note that essentially the company is pre-revenue, and so we don't expect a material ramp in revenues until the third quarter and fourth quarter of next year, as they begin to ramp up space flights again after the current spacecraft enhancement period that they're currently undergoing on the two existing spaceships.
So nothing too surprising here, right? But a good summary of where we are. And again, a good call out to the fact that Virgin Galactic is pre-revenue, and realistically, investors need to temper expectations and really look long term. One thing they did cover during the earning call that was noteworthy is the outcome of the FAA investigation into Virgin Galactic deviating from the flight path during their Unity 22 flight over the summer. That yellow section that you're looking at in the light blue is where they deviated from the originally approved flight path, and moving forward, they have been granted additional airspace by the FAA, which should eliminate any future violations.
Well, let me just follow up on that here. A little bit of a disappointment a month ago when they announced that they would be postponing their commercial flight operations until, I believe, the fourth quarter of 2022, but signaling that they're going to be flying 3 times monthly in 2023. Is this what investors want to see right now?
I would certainly argue yes. I mean, the most important thing that Virgin Galactic needs to do right now is scale the business. And the maintenance and enhancement period that they're currently undergoing on the VSS Unity spaceship and the VMS Eve mothership is intended to achieve that objective. The intended flight rate is expected to be once every 4 to 5 weeks for the VSS Unity after the upgrade period, as opposed to 7 to 8 weeks currently in turnaround time. And they plan to have the VMS Eve mothership, which carries the vehicle to altitude for launch at around 45,000 feet. They plan to have the amount of flights that can be conducted in between maintenance periods to be around 100 flights after this enhancement period is completed. And then, of course, the future spaceships, the VSS Inspire, which is a Spaceship 3 class vehicle, and the upcoming Delta class vehicle are expected to have much better turnaround times between flights. The target flight rate for the future Delta class spaceship is once per week, which will be critical in being able to scale the business and work through the outstanding backlog.
And those are all key points previously discussed during the Q2 earning call when the enhancement period was originally detailed. If nothing else, it was good to hear a consistent message during this earning call. They actually spent a decent amount of time really focusing in on why this enhancement period was essential. They've proven that conceptually, space tourism is a viable business. And so now really the focus really needs to be on how do they scale up from here. And as Michael Colglazier, their CEO, said, they are now in a critical phase of the business that will set them up for long-term success.
And then how close are they, sir, to having future astronauts in the pipeline before the actual flight start? And then how much are they charging? The prices have gone up significantly, correct?
Yes, that's correct. The original ticket price for a flight on Virgin Galactic, which essentially goes suborbital and takes you to the edge of space, was $250,000. The new ticket price announced in July when they reopened ticket sales is now $450,000. However, during the earnings rolls, they did indicate that they've added 100 new passenger deposits since they reopened ticket sales in July. And what's so interesting about that is that these passengers were derived from their One Small Step initiative, where they had 1,000 people put down a $1,000 deposit indicating their interest in a future space flight. And they got 10% of those people to convert into a $150,000 deposit, of which $25,000 is non-refundable. So it's certainly apparent that the TAM opportunity here is significant. If you look at the worldwide number of high net worth individuals, it's somewhere around 19.5 million. And in our estimates, we estimate that only 5% of the cohort with the net worth between 1 and 5 million are interested in spaceflight. And we think that that may actually be a conservative estimate.
Now, this is an important point. The extra 100 customers Virgin Galactic was able to sign up brings up the total number of paying customers to 700. 600 who paid $250K, which is the initial ticket price, and 100 who paid the new rate of $450K. Why does that matter? Well, even though those new 100 customers only paid a third of the ticket price to hold their seats, so $150K of the $450K at the moment, most of those sales took place in late September, early October. And therefore, the bulk of the $45 million of revenue this would represent will hit in Q4. There is potentially more upside to this number, and as they indicated during the earning call, they will continue to work towards converting more and more members from the One Small Step program into full-on paying customers until they reach that backlog of 1,000 paying customers. And so those 1,000 customers will then be flying when we start commercial flight in Q4 of next year. And that right there was a welcome surprise, and the reason why the stock gained a little over 5.5% during the Tuesday trading session.
And I wanted to ask you, sir, really quickly, if you could tell me about cash burn. How much of that is an issue going forward for this company? What are they spending the money on? Is it on technology and enhancements? Because there's also space for it to maneuver into hypersonic flights, correct?
Right. There is expectation that they want to develop vehicles for hypersonic point-to-point travel in sometime in the near future. However, the primary focus right now on the business is development of the Delta class spaceships, which are going to be the production series spaceships with the high turnaround rate between flights of 1 week that will replace the VSS Unity and the VSS Imagine spacecraft. In the fourth quarter, management estimates that there will be free cash flow use of around 90 million at the midpoint, which is markedly higher than the most recent quarter, and they expect it to remain elevated through the next year as they get towards the first future astronaut flights in the fourth quarter of next year, and of course, further development of the Delta class. So that's currently where we see things going right now.
Well, up until now, Virgin Galactic was running at a cash burn rate of $60 to $70 million per quarter. As we move forward, that cash burn rate will accelerate and be in the range of $85 to $95 million. The emphasis is now on developing the Delta class spaceships that will be capable of achieving a high frequency flight rate of once per week. The other reason why this is important is that this is the level of flight frequency performance that is needed in order for Virgin Galactic to generate enough revenue in order to turn cash flow positive by mid-decade. Supersonic flight is icing on the cake, but really isn't expected until 2025 at the earliest. You can see that the current flight plan has 4 expected revenue-generating flights starting in summer next year through the end of 2022. The bottom line is this: even with the increased cash burn rate, they have nearly $1 billion on the balance sheet at the moment. Additional revenue is expected to trickle in from ticket sales and flights in 2022 and 2023. So Virgin Galactic is well capitalized to deliver on the plans they have laid out. It's now really going to be all about execution moving forward. In addition to Austin's, we have 4 more rating updates that were issued post-earnings call. First is Charles Minervino, who maintained a hold rating but lowered his price target from $27 to $22. Second rating was from Oliver Chen from Cowen & Co., who maintained his buy rating but also lowered his price target from $30 to $25. Third, we have Kristen Liwag from Morgan Stanley, who maintained her sell rating and lowered her price target further from $17 to $16. And last but not least, we have Doug Harnd, who maintained his hold rating while lowering his price target from $25 to $22. And so my take is this: going into this period of no flight activity that will last roughly 6 to 8 months, analysts are going to be more cautious and will continue to revise their price target lower regardless of the ratings they have on the stock. I personally have about a quarter of my target goal share counts left to buy, and so the current price represents a golden opportunity for me to average down even further, and that's exactly what I plan to do. This is certainly not meant to be financial advice, as I have a long-term view on the stock, and I'm perfectly okay with parking my cash here while it remains virtually flat for the next couple of quarters. The last point I'll make is this: Virgin Galactic went public in October of 2019. 2 years later, the stock has appreciated by 85.39% at the time of this recording. They've delivered on every milestone to obtain their commercial license. And yes, it was volatile along the way. I mean, look at the stock chart here. But the trend is undeniably to the right of the screen and up. And so for me, I strongly believe that riding this roller coaster will pay off long term. And on that note, I'll leave it here for today. If you enjoyed the content, make sure to smash the like button and share with others who you think could benefit from it. For my newcomers, subscribe and don't forget to ring the notification bell so that you don't miss out on any future content just like this. As a reminder, I post every Sunday and I try to target at least one more video in week for crypto-focused content. Thank you for watching, stay humble, hustle hard, and I'll see you in the next one.